December is the make or break month for nonprofit organizations, houses of worship and other charities dependent on Americans' year-end giving. This year, some Americans are expected to add in some of next year's gifts, too, since after 2017 charitable spending may come with an extra price. Religious givers, more generous than the average American, are among millions of donors who face decreased tax incentives on their contributions under the early versions of tax bills in Congress. That's bad news for houses of worship as well as local charities that religious givers tend to support as generously or, in some cases, more so than their secular neighbors. The House and Senate tax plans would roughly double the standard deduction from $12,700 for married couples filing jointly, $6,350 for singles, to $24,000. By shielding the first $24,000 of household income from taxes, it would also dramatically reduce the number of American families who itemize deductions for breaks on things such as medical bills, mortgage interest, and charitable deductions. This change has the potential to affect middle-income families, according to Una Osili, professor of economics and associate dean for research and international programs at the Indiana University Lilly Family School of Philanthropy. She estimates roughly 30 million households making between $50,000 and $100,000 will be less likely to itemize their deductions on their taxes. For those people, their charitable giving will effectively be taxed. Households whose itemized deductions total less than the new standard deduction would simply take the standard deduction regardless of their level of charitable giving. To claim a tax deduction, while they can, Osili said some households may take some of next year's giving and make donations before the end of this year. It is difficult to say exactly how these changes will affect particular families. Households at the low end of the range, for example, who give generously, recently bought a home, and also had unusually high medical bills might still itemize. Households at the higher end of the range who give less and have no medical bills or other itemizations may opt for the standard deduction. Giving is expected to decline. But it's clear that this will have significant repercussions on congregations, charities, and other nonprofits. According to a report by the Lilly Family School of Philanthropy, itemizers are much more likely to donate to charitable causes. The study found that 83% of itemizers reported donating any amount of charitable giving at all, compared to 44% of non-itemizers. In fact, non-itemizers contribute less than 20% of total giving. Moving 30 million households from itemizers to non-itemizers will have a measurable impact on donations. Osili predicted at least a $13 billion drop in charitable giving if the new standard deduction becomes law. As the bill takes shape, other estimates are rising. The independent sector, a consortium of nonprofits groups, now says, adoption of the House bill will result in only 9% of taxpayers choosing to itemize and able to claim the charitable deduction. This shift will result in a $12-20 billion decline in charitable giving each year.